Hey all, welcome to ShareTreck, where science meets investments. I'm your host Raj. Friends, as always, I'll keep this short, simple, and crisp. Today we are diving into Illumina, a company that we haven't checked out for quite a while. The ticker symbol is ILMN. Illumina is the global leader in DNA sequencing that's navigating rough waters, but could be setting up for a powerful long-term breakout, in my opinion. So, what's going on with Illumina? Is it still stuck in regulatory drama and market stagnation, or is the company quietly building towards blue chip status? Let's unpack it all. Let's get started. Welcome back, friends. Let's start with the numbers. In Q1 2025, Illumina reported $1.04 billion in revenue, a 1.4% decline year over year. But here's the positive twist. Earnings per share beat expectations at 97 cents versus forecasted 94 cents. That's thanks in part to a healthy non-GAAP gross margin of 67.4%. Now looking ahead to Q2 2025 results, which are due on 31st of July, analysts are expecting around $1.05 billion in revenue and an EPS of $1.01. That is still a 4% drop compared to last year, but it's a smaller decline than Q2 2024's 5.8% slide. So even in a tough environment, Illumina is showing discipline. They have launched a $100 million cost-cutting initiative in response to China blacklisting Illumina, and they appear to be managing margins efficiently. But there is one big drag on performance right now, and that is China. Earlier this year, Illumina was hit hard by the Chinese trade actions. In February 2025, China placed Illumina on its unreliable entity list. Then, in March, MOFCOM banned imports of Illumina sequencing equipment. That has real impact. The company expects $85 million in added tariff costs and a 25-cent EPS hit for full year 2025. China revenue has dropped sharply, but here's the key. This is likely temporary. Of course, some of our viewers from Australia say that once China bans a company, it doesn't take it off the banned list. But I'm still hoping that this is likely temporary because Illumina has industry-leading technology. Illumina's technology isn't being rejected. It's being blocked due to broader US-China tensions and China's domestic biotech ambitions. If and when these restrictions ease, I think Illumina is well positioned to re-enter a fast-growing genomics market. The company is staying engaged with Chinese officials and isn't pulling back from the region. So while China is a drag today, it could become a major growth engine again tomorrow or a second win. So friends, at this stage, I'd like to ask you, if you're finding this breakdown useful, you like these kind of videos, please do me a favor, press the like button. It helps the algorithms and also it helps me in the channel. That said, let's get back into the topic. Now let's talk strategy. Illumina's decision to divest Grail in June 2024 was a big game changer. That acquisition had created years of legal battles and financial distractions, knocked out billions of dollars from the company's valuation. It's gone now for good. And that's a good thing. Under CEO Jacob Thaysen, Illumina seems to be laser focused again on its core: sequencing, bioinformatics, and platform innovation. One of the most exciting developments, in my opinion, is that collaboration with NVIDIA. This partnership brings Illumina's Dragon algorithms all together with NVIDIA's GPUs to accelerate multi-omics data analysis.
Mentioned here, we changed how you think about an understanding of the genome over the last 2 decades. Now it's time to take it to a completely different level, meaning that while we're super excited of genomic sequencing, biology is much more complex than that. So having a deeper understanding of biology means that you need to combine genomic information with proteomics and other omics, as we call it. That complexity, no individual can actually in front of their computer get that full understanding. So the combination of our detailed understanding of genomic and other proteomics, and now also combining that with AI capabilities to really get much deeper insight, build what we call foundational models, is really the relationship NVIDIA and Illumina is not going to drive. So we are allowing a lot of the tools and a lot of the compute power that NVIDIA is providing. We can now offer that to our customers to really drive new insights in biology.
This isn't just about making sequencing faster. It's about using AI to extract deeper insights from genomics, speeding up drug discovery, and reducing cost per diagnosis. And the result of this for many genomic companies would be that they would select much better candidates for their pipeline, and they would have a greater opportunity to succeed, thereby improving performance and survival rate of genomic startups. I think if Illumina gets this right, it could shift from a cost per gigabase company to a cost per answer company. That's the kind of value revolution that investors look for in future blue chips. So how are analysts looking at all this? Well, right now, ratings range from hold to buy. The conservative crowd is targeting $107 to $125 per share, a modest 13 to 15% upside from current levels around 108. But here's where it gets interesting. The consensus price target among 42 analysts is around $177 by the end of 2025. That's nearly a 65% upside, assuming the China risk fades and AI integration starts delivering results. That tells us there is real long-term belief in Illumina's platform and market position, even if the near term looks murky. Illumina is not yet out of the woods, but it's no longer lost in the fog either. It has shed the grail burden, cleaned up the deck, starting with a clean slate. It's proactively cut costs and is teaming up with AI leaders to future-proof its product suite. If the China restrictions begin to ease, that could open up massive revenue potential almost overnight. The upcoming Q2 earnings call on July 31 will be a key point, especially for commentary around China, cost-cutting progress, and any updates on AI strategy. Well, friends, thanks for watching this video. If you have not subscribed, can you please subscribe and help grow the channel? Well, friends, I have an announcement to make before I wind up this video. I have rebranded the sister channel ShareTreck HIV into TheraTreck. The reason being that we have got absolute domination on YouTube for HIV therapy and research, and now I want to widen the scope to other things like type 1 diabetes, type 2 diabetes, heart conditions, ALS, and many other ailments for which there are innovative medicines that are being developed, innovative gene therapies that are being developed. So that channel is going to talk in detail about each of these diseases, how it works in the body, what are the current standard of cure, and what are the new therapies that are in the pipeline, what is the chances of their success, what is the method of working, and which company is pioneering them. So all of that is out there. So please check out TheraTreck. I'm putting the link in the description. And if possible, please subscribe. You'll find it very useful as genomic investors. With that said, friends, thanks for watching this video. If you have not yet subscribed, can you please subscribe and help grow the channel? This brings me to an end of this video. Bye for now.